long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion, and I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to 1 that historically we were. These were both, well, it's peace dollar. Okay. These are both $1, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at $3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between $1,300 and $2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of derivatives, but they cannot inflate it away. The point is they are both money. They're just the opposite sides of that money coin. And as this loses more and more and more of its purchasing power value, these go up in nominal terms. But what they really do is they create a bridge, because when one currency goes away, another one comes in. It's just that you need something and I need something. We need something that will hold its purchasing power intact to get us from one system into the next system. And dare I say it, even have the ability to take advantage of the opportunities that will present as these extremely severely overvalued fiat money assets. And real estate is actually not pure fiat money because it is a tangible as well, but it's severely overvalued. That's going to flip-flop. So if you can hold your purchasing power intact, you're going to be able to have that wealth transfer your way.
In an exclusive interview with Commodity Culture, Lynette Zang, CEO of Zang Enterprises and a markets veteran with decades of experience, delivered stark warnings about America's monetary future. What's her central claim, you may ask? She claims that President Trump's recent signing of the Genius Act has fundamentally altered the global monetary system and will trigger hyperinflation that makes silver worth $2,000 per ounce and $40,000 for an ounce of gold. We'll examine the evidence behind these extraordinary claims, analyze the technical patterns Zang identifies in precious metals charts, and investigate whether her predictions about stablecoins and currency collapse hold up to scrutiny. Tonight's key questions: are we witnessing the end of the dollar's dominance? Could silver really reach 4-digit prices? And what does this mean for everyday investors? But before we dive in, smash that subscribe button and hit the notification bell to get the latest update and deep dives. Thank you. We begin with Zhang's technical analysis of precious metals markets. According to her assessment, both gold and silver are approaching critical breakout points that could signal massive price movements ahead. For gold, Zang identifies a series of higher and higher lows, with prices testing resistance levels multiple times. She expects a significant breakout within the next reasonable period of time. But it's her silver analysis that's generating the most attention. Zang points to silver's approach to the $40 level, with the next major resistance at $50. Here's where her prediction becomes particularly bold. She believes breaking above $50 would complete what she calls a double cup formation, a technical pattern she describes as quite powerful. This pattern, if confirmed, would represent decades of accumulation dating back to silver's 1980 highs. Zang argues this isn't just technical analysis, it's the conclusion of a 45-year base building process. The data shows silver currently trading near $40, with industrial demand continuing to outstrip supply. London Bullion Market Association inventory data cited by Zang shows significant drawdowns in physical silver stocks, unlike gold, which has largely replenished reserves after early 2025 outflows to the United States. Zhang's most controversial claims center on what she calls the true fundamental value of precious metals. Using historical gold to silver ratios, she calculates gold should trade between $33,000 and $40,000 per ounce, with silver proportionally valued between $1,300 and $2,000. Her methodology relies on the traditional 20-to-1 gold-silver ratio, demonstrated using historical U.S. coins, where a $1 gold piece and silver dollar maintained this relationship. At current gold prices around $3,400, she argues both metals are ridiculous bargains. Zang acknowledges these are fiat money calculations, meaning the extreme prices would only materialize if current currency systems collapse entirely, a scenario she considers inevitable. Let's get back to the rest of the video.
Silver space there, that is a very broad question. But I see that both on the spot market for both gold and silver, them coming to a critical point. With gold, what I'm seeing is a series of higher and higher lows as the top end have been kind of bouncing against it about 3 or 4 times. So I expect a breakout within the next reasonable period of time, short period of time. With silver, it's probably even a little bit more exciting because we are now really coming to that $40 and the next bump is at that 50. And when it goes above that 50, what you'll see on the spot silver chart, especially if you zoom all the way out, is the conclusion of a double cup formation, which is a cup formation is a major accumulation pattern. A double cup is, I imagine that to be quite powerful. So, I think that could happen maybe by the end of this year or into the first quarter, but either way, on both the spot markets, I see them extremely strong. And I think that a lot of that has to do with the level of chaos, the level of inflation, the level of geopolitical issues, many issues that are swirling around right now, central bank independence, all sorts of stuff. Yes, I definitely do think that triple digit price. Now, one thing that you mentioned about 80s with the Hunt brothers accumulating silver because they wanted to leave the U.S. and form their own little country in Texas. However, the importance of that should not be just trivialized or ignored, because what we were really dealing with was an overt manipulation by our government of the silver markets. And everybody was warned. And I have to say, Jesse, I have often wondered when these things that happened and they seem outrageous to me, like taking the gold away from the population, like taking the silver away from the population, like a sitting president admitting that they're going to manipulate the markets. And I used to wonder how they could get away with that, why people didn't rise up and say, no, you can't do that. That's crazy. Well, I think we're living through that right now. And I'm seeing it happen. I think there's a lot of blindness that's going on. So I do actually consider the $50 mark nominal, to your point, to a very valid point, because these markets are manipulated. They are admittedly manipulated. And so if anybody really expects there to be any level of good price discovery with spot gold or spot silver, and I always make sure I say spot because that is just a contract. And when you're talking about silver, there's a chart from the LBMA that they came up, and of course we know that there was a huge rush of physical coming into America at the beginning of this year. And you can see the stores in the LBMA dropping in gold, dropping and then rising again and coming back pretty close to the levels that they had before whatever came out of the LBMA. I'm actually more interested in what came out of the BOE, but let's just stay with the LBMA for a minute, because the same kind of issue with the physical metal being shipped over happened with silver as well, but their stores are significantly lower than they were before that physical push into the US. So what does that tell you? It tells you that silver gets used up in industry. And just like the SLV silver ETF that is supposed to be a basket of silver, they couldn't put the basket together. So back in, I don't remember whether it was 21 or 20, but they changed the prospectus. SLV changed its prospectus so that they didn't actually have to pull a basket of silver in, but rather all they had to do, which is what they were designed to do anyway, which is imitate the spot silver market. That's telling. When you're talking about silver, that is so telling because silver is the secondary monetary metal, but it is rather, I'm pretty sure that Saudi Arabia would be considered an administrator, which means that they would, you and I can't do it, but they would have the ability to take possession of the underlying silver. So I think that that is a manipulation to make that happen, because that can happen even more invisibly than what we were just talking about. And since silver is used across every single sector of the global economy, in solar, in medicine, et cetera, and gold is as well. Both of them are, but silver more so straddles that world. I think that this could also be a maneuver to ensure that they get their hands on the physical silver. At the end of the day, the holders of SLV won't. I mean, the normal holders of SLV wouldn't, but JP Morgan would and Saudi Arabia would. So I think it's a backdoor way to do it and have control of it. But the real problem is it would have to be done strategically. Like I'd be curious to see how much of a percentage of the holdings that they already have in silver that would actually represent. Because if they did take out the physical at the same time that SLV itself, that trust, is selling off bits of silver on a daily basis to pay the rest of the fees, the repercussions for the public would be huge. Those that think that they actually own silver with an SLV, they just own shares in a trust. But that could have some really significant significant impact on the risk transfer to the public.
Perhaps Zhang's most explosive claim involves the recently signed Genius Act, which she says represents the first legal framework for cryptocurrencies and stablecoins in the United States. According to Zhang, this legislation doesn't just regulate digital assets, it fundamentally changes the global monetary system. When President Trump signed the Genius Act, he changed the global monetary system, Zhang stated, adding she's putting her technical neck on the line with this prediction. Her argument centers on stablecoins, digital currencies backed one-to-one by U.S. dollars. Current stablecoin market capitalization stands at approximately $125 billion, but projections suggest this could reach $2 trillion by 2028. Zhang sees this as creating artificial demand for dollars. similar to how the petrodollar system supported U.S. currency dominance. However, she warns this mechanism will ultimately accelerate hyperinflation by making it easier and cheaper to create new money. Supporting Zhang's precious metals thesis is documented evidence of changing central bank behavior. The interview highlighted Saudi Arabia's recent purchase of 932,000 shares in the SLV Silver ETF, notable because central banks traditionally don't hold silver reserves. Zang interprets this as a strategic move to secure physical silver access, suggesting the Saudis could exercise redemption rights unavailable to retail investors. This aligns with broader trends of central banks diversifying away from dollar reserves into hard assets. Silver's recent addition to the U.S. Department of Interior's strategic minerals list adds another data point. Combined with ongoing supply constraints in industrial applications, from solar panels to medical devices, physical demand pressures appear genuine. The key question remains whether these fundamentals justify the extreme price targets Zhang projects, or if they simply support more modest appreciation over time.
As long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion, and I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, would 3 or even 4 digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce, and that's just based on the 20th to 1 that historically we were. These were both, well, it's a peace dollar. Okay. These are both $1, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at $3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between $1,300 and $2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of garbage derivatives, but they cannot inflate it away. The point is they are both money. They're just the opposite sides of that money coin. And as this loses more and more and more of its purchasing power value, these go up in nominal terms. But what they really do is they create a bridge, because when one currency goes away, another one comes in. It's just that you need something and I need something. We need something that will hold its purchasing power intact to get us from one system into the next system. And dare I say it, even have the ability to take advantage of the opportunities that will present as these extremely severely overvalued fiat money assets. And real estate is actually not pure fiat money because it is a tangible as well, but it's severely overvalued. That's going to flip-flop. So if you can hold your purchasing power intact, you're going to be able to have that wealth transfer your way. Such a good point. Yeah, this is definitely due to get a whole lot worse. And generally speaking, historically, 80% of the population ends up in abject poverty as we go through this, and the middle class is absolutely wiped out. Though that trend really started around 2000. So really, it's not like any of this is new. We're just now at a point where, I mean, you just see these buy now, pay laters in mainstream all the time because people cannot even afford food. So we were trained not to have gardens, right? To be dependent on the grocery store. And we got a warning in 2020 with COVID when you couldn't get your food from the grocery store, when those shelves went bare. And what did that reveal? The supply chain issues, but that has not been repaired. So I expect that to get much worse. And that's why I became a prepper, because food becomes the single biggest issue for people. But also on top of the huge food issue, which is getting worse, is also the water issue that's getting worse. And that too is a global issue. And so, when 2008 hit, just like I 100% knew that was the end of the system as we knew it, and I became a prepper, I can tell you that's how it feels to me with the stable coins. So there is absolutely zero doubt in my mind. And I developed my mantra from that based on what I knew that I needed. So that is to create surety in food, water, energy, security, barterability, wealth preservation. Community is arguably the single most important part of that, as well as shelter, because these are all the things that we need to lead a reasonably stable life. And community has risen to the top because I started right after 2008, and I'm more prepared than probably anybody else I know, but I'm still not 100% prepared. I could deal with it if it happened tomorrow because of all the steps that I've taken, but we don't have that kind of time anymore. And so it is critically important that we come together in community. Go to your local farmers markets wherever you are. In Serbia, I think there's a lot more community, isn't there? Where people come
Oh,
together to
yes.
help each other.
Yeah, so that's one of the things I love about this country. I think because of the hard times they've been throughout their history, the Yugoslavian Communist Empire, the Balkan Wars, which were literally yesterday. That was like in the 90s, which is just yesterday in history. I find a helping hand everywhere I look in Serbia, and I don't even have to ask for it. So there's also,
Exactly.
everybody here is Orthodox Christian, practicing Orthodox Christian, so they tend to live the tenets of their faith. So for all those reasons, Serbia is a great place to be for community.
Well, unfortunately, that's not really what we have in the US. You could speak more to Canada from that, but
We don't have it in Canada either.
yeah,
Trust me,
I
that's why
didn't
I'm
think
here.
so.
That's why I'm here and not there.
And that's why it's so important that we take the steps, because I will tell you this, and I've done this a long time and I encourage everybody to do. When you're looking in the mirror in the morning, you got to ask yourself, if not me, who? And if not now, when? Because if we don't take responsibility for ourselves and our fellow man, then then the life that they have planned for us, which is a full surveillance economy. And we got a little snicker snack of that from Canada and the trucker strike, right? Where boom, it was a perfectly legal and peaceful strike. And they shut down all of those accounts. And then anybody that even donated $5, probably even $1 to these truckers, they shut down those accounts too. And that was shocking happening in Canada. Shocking. But it was, my mom used to have a saying, and I used it with my daughters too. When someone tells you who they are, believe them. Because a lot of times people, oh no, well, I can make them better, or blah, blah, blah. No. And so the government in Canada, which is the US's closest neighbor, well, Mexico is there too, but the government in Canada that we thought was the most like ours just showed the colors. And I think our government's showing their colors too. Believe them. It ain't there. None of this is happening for yours and my benefit. This is happening for those that have been chosen to succeed. I want to level the playing field. And from what I can see, the only way to level the playing field is to get sound money back in the system again. And it has to be redeemable, because if it's not redeemable, it's not going to work. We need to take our power back as citizens. And that is my battle. Not just my battle, but I am on the advisory board of Citizens for Sound Money. And I do travel around the world talking about sound money and trying to get it back in the system again. That's physical gold, physical silver, but it has to be redeemable.
Well, speaking of trying to keep things together, the Genius Act, stablecoins, these are two things that you mentioned before we hit record today that you've been watching very closely. Walk us through the basics of what the Genius Act is and why you think the U.S. government has introduced it.
Well, the Genius Act is the first legal foundation for cryptocurrencies and stable coins in particular. I personally believe, there are many reasons why this administration made the choice to legalize that. There's definitely stakes in the game, but it had to happen anyway because we're moving into a new digital system. And what nobody really realizes yet, and I'm so glad I'm old because I've lived through this and I know how to recognize it, and I've studied it since 1987. When President Trump signed the Genius Act, he changed the global monetary system. And I believe that, I'll put my technical neck on the line with this. I'm not even giving myself any wiggle room in here. Although, of course, I will say I could be wrong, but from the tip of my head to the bottom of my feet and every single area in between, I believe that this will now usher in the hyperinflation to burn off the debt that's being created. But make no mistake at all, when he signed that, the monetary system changed, period. Now, the fact that most people don't know about it yet is not relevant, but I was there in 1965. I was about 11 years old at that point, so I didn't really understand what happened, but I remember that period of time. And I was there in 1971 when we went off the gold standard. And I remember I was about 17 years old. So I definitely remembered all of the chaos and everything around that currency regime shift. And there is not one doubt in my mind that we just experienced that a couple of weeks ago or 3 weeks ago, whenever he did that, the beginning of this month. And that was about, look, this is the way I view President Trump. He is a change agent. This change had to happen because we have used up all the purchasing power value in this stuff. And once you do that, there is no place to inflate away. You must attack principle. But since at the same time, what's been happening is a shift in the allegiances on a global basis. So the rest of the world has, as we know, they've been turning away from the U.S. Treasury market, which is the foundation of the global financial system. Well, when one market goes away, they got to find a new one. And so by legalizing the Genius Act and requiring all of the stable coins, at least that are issued by this country, to be dollar-backed one-to-one, what he's done is created a new artificial market, just like Kissinger did back in the 80s, 70s and 80s with the petrodollar. So that's what he's attempting to do. And right now, according to a recent article, think about this because it's crazy, right? But in a recent article by the St. Louis Federal Reserve, they talked about the impact of the stablecoins. And right now, there's about 125 billion stablecoins in this market. And most of them, it could be, I don't have this number in front of me, but somewhere between, I think it's even 99% of currently all stable coins that are issued are dollar based. And they've been adopted majorly in third world countries, particularly in Africa, where their currencies are experiencing very, very high inflation. So what he's done is he's made sure that every new stablecoin that's going to be issued by any corporations in the US, because that's who issues them. We don't want CBDCs here. Okay, well, I'm pretty sure we don't want stable coins either. But the CBDCs have a central location and there would just be one per country. The stable coins are issued by any corporation. So we'll have Amazon stable coins and Walmart stable coins and Kmart stable coins and, JC Penney, as well as JP Morgan, as well as Hong Kong stable coins, the yuan stable coins. So it is an extraordinarily fragmented market. But they are thinking that within the next 2.5 years, by 2028, they will go from about 125 billion stable coins to $2 trillion in stable coins. And they are busy creating the legal framework of safe harbors and exemptions and all of these things. So if I take you back to 2008 and the great financial crisis, where what these bankers did was disgusting and vile and cruel and destroyed so many people's lives, nobody went to jail. And they didn't go to jail because legally they didn't do anything wrong. Ethically, it was horrible, but legally it wasn't. And they're setting that same kind of system up now and encouraging all of this experimentation. And guess who's the guinea pigs? And guess who's just about the right size to fail? But that's also why I say that this is what's ushering in the hyperinflation. Because the easier and cheaper it is to create new money and spend new money, the more will be created, the more will be spent. And really, how do you even value any of these cryptocurrencies? I mean, if they do a physical representation, because that's all this is, these aren't Bitcoin or Ethereum or XRP. They are the physical representation. And I find it so interesting that they make them look like 1 ounce gold coins. Psychological.
Yeah.
And disgusting.
Very.
Lynette Zang's predictions represent some of the most extreme views in current precious metals analysis. Her $2,000 silver target and hyperinflation warnings deserve serious consideration given her decades of market experience, but they also require careful evaluation against available evidence. For investors, the key takeaways is that regardless of whether Zang's extreme scenarios materialize, the underlying trends she identifies, monetary instability, currency diversification, and precious metals demand represent legitimate factors worth monitoring. Rather than betting on apocalyptic outcomes, prudent investors might consider modest precious metals allocations as portfolio insurance while maintaining diversified strategies. Drop your thoughts in the comments. Is silver your next big play? Subscribe and hit the bell to stay ahead of market trends. Thanks for watching.